short-term decisions. The short-term decision represents the application of marginal costing technique, and then okay. So I said short-term decision represent the application of marginal costing technique and the relevant costing principle to analyze a particular course of action in making managerial decision. All right. So remember, or you will recall that we started with operating statements where I mentioned to you that relevant cost marginal costing technique is designed principally to aid managerial decision. All right. So when it comes to decision making, you need the knowledge of marginal costing concepts. And of course, because there are several costs, not all costs are relevant. The principle of relevant costing will also be needed. So the combination of the two, marginal costing technique and the relevant costing, are what that will be used in making the manager in adding value to the managerial decision. All right. So for this purpose, we can say that marginal costing technique is involve the process of comparing, all right, the process of comparing the benefits arising from a particular course of action with its associated benefits. Okay, okay. The process, it involves the process of comparing the benefits arising from a particular course of action from his with his relevant costing. All right. So you want to compare what is the revenue associated with a course of action together with the relevant cost, whether it will result in contribution, profit or loss, savings or deficit to the organization. So that is marginal costing under this situation. Not only that, marginal costing technique is also known as cost-benefit analysis, because management may want to know whether the benefits from a course of action will outweigh the total relevant cost. All right. This is because the marginal costing technique relies heavily on the behavioral classification of costs. That is, a cost item must be capable of being classified as either variable or fixed cost. Okay. Now, what do you understand by decision making? What do you understand by decision making? The decision making represents the process of selecting a course of action from among alternatives. When you have several alternatives and you make a choice, so the process of making a choice from different options available is what is known as decision making. Hence, the quality of decision making within an organization will have far-reaching effects on the success of the business in the marketplace. This is because a bad decision can have a far-reaching effect or can have material effects on the can result into financial losses to the organization. Not only that, it can impair the ability of a company to take advantage of market conditions. A bad decision making can damage or erode the reputation of an organization, and that's why it is important that when there's decision that is to be made, you need to bring it to the attention of the management or the designated decision makers for proper guidance, and at the same time to avoid any wrong decision being made. All right. So when it comes to decision making, you as a management accountant, you allow the decision makers to do with the decision that is to be made. Because if you as a management accountant commit any error or you make any wrong decision that affects the performance of the business or that resulted to financial losses to the organization, the consequential effects may be material. And that's why your responsibility in this regard is for you to make recommendation to the management. You support the management, you provide suggestion, your expertise. You advise the management on the right thing to do, and you leave the decision-making activity to the decision maker or to the top level or the highest level decision making hierarchy within the organization. So that is for that, because you can't be the one that will prepare the report. You also be the one that will make the decision just because you know so much about the business. No, it doesn't work that way. There is segregation of duty, which state that an individual should not complete a task. I should not start a task and complete it. There should be a third party that will come in to review, to approve, to check the accuracy of what has been done, just to ensure that the right thing is being done and to avoid any risk that the company may be exposed to. All right. So that is essence of having that kind of segregation of duty. That is just by the way. Now, whatever you want to do under short-term decisions will be critically examined in two perspectives. One is economic perspective and then the qualitative perspective. All right. What do you mean by economic perspective? The economic perspective is the same thing as quantitative, quantifiable, or monetary perspective of the decision that is to be made. It involves the process of comparing the relevant cost of a course of action with its associated benefits. Okay, so when you do the calculation by comparing the sales value with the relevant cost, it means you are trying to carry out the quantitative analysis, or you are trying to carry out economic angle or economic analysis of the decision that is to be made. All right. Of course, the other parts, which is the qualitative factors. The qualitative factors is also known as the non-quantifiable, non-monetary factors of the decision that is to be made. It represents those factors that cannot be expressed in monetary value, okay? Any factor that you cannot quantify, they are what is called qualitative factors, okay? Those are what is called qualitative factors. All right, so that is for that. Then, what are the areas of the application of marginal costing technique? At least I can count, there are about 9 areas in which marginal costing technique can be applied to decision making. One is deleting of a segment. 2, make or buy decision. 3, acceptance or rejection of a special order. 4, shutdown of capacity. 5, adding of a new segment or a product. 6, pricing decision. 7, optimal product mix. 8, linear programming. 9, cost, volume, profit analysis. These are some of the areas in which you can apply or you can use marginal costing technique to aid managerial decision. Now, our focus in this class will be on the deleting of a segment, make or buy, and then the acceptance or rejection of a special order. Every other item that I mentioned in those 9 items I listed, I mentioned, we are going to do it separately, individually as we proceed during the course of these diets. All right. Like for example, optimal product mix, linear programming, CVP analysis, they are topics on their own. Mr. Ashwaju has already taught you pricing decision, okay? So which is part of decision making. All right then, so let's pick it one by one. The first item is deleting of a segment, all right? So let's explain. What do you understand by deleting of a segment? How will you know that you are supposed to use deleting of a segment principle to analyze the course of action? All right, so these are the things we want to discuss briefly. All right, so let's talk about deleting of a segment. When you say deleting of a segment, it's the same thing as discontinuance of a segment. All right. Often in an organization, management may be thinking of closing down a particular segment, especially when the affected segment is not profitable. All right. So when you talk about segments, what we simply mean is a type of customer, geographical location, all right, channels of distribution, or products, product line, or type of products. So these are the things we usually regard as regarded as a segment. So say for example, you have product A, product B, and then product C. Say we have profit or loss. Profit or loss. For product A, we have a profit of 5 million. Product B, we have a loss of 2 million. Product C, we have a profit of 3 million. So because product B is operating at a loss, management will now be thinking of closing down product B so that they can concentrate on the profitable venture. So this is the main reason that we make management to be thinking of closing down a segment. So when a segment is not profitable, or when a segment is operating at a loss, management may be thinking of closing down that segment. So that is the only reason. I'm telling you, that's the only reason that we make management to be thinking about closing it down, because the segment is operating at a loss. Because at times in a question, the examiner may not give to you the income statement that will show the profit or loss. All right, examiner will just tell you to advise whether the company should discontinue the segment or not to discontinue. So you should know that the only reason that we make management to be thinking of closing down a segment is if that segment is operating at a loss, when the segment is operating at a loss. Therefore, the decision to discontinue or not to discontinue a segment will depend on the two perspectives that we mentioned the other time, the economic perspective, and at the same time, the qualitative factor that needs to be taken into consideration. Now, when you want to analyze the economic perspective of the decision, the most important thing you need to do is to evaluate the financial and economic viability of the affected segments in order to ascertain whether it will result into a positive or negative contribution to the organization using income statement or contribution margin approach. All right. So whenever under the deleting of a segment, the most important thing you need to do under economic angle or under the quantitative analysis is for you to compare the sales value and the relevant cost of making the segments, okay, of producing the segments, whether it will result into a positive or negative contribution to the organization. That's what you need to do. So then, of course, there's a format that I'm supposed to use. Let me just give you the format once and for all. Now, when you want to prepare your contribution margin statements, the first item will be that, of course, you are going to have your sales value. Okay, to get your sales value, just multiply the number of units sold with the selling price per unit. Then you now compare the sales value with the total relevant cost. So you go to the question, you pick your direct material. All right, direct material may not be given to you, but you are going to be given direct material per unit. Then you now multiply with the unit produced to get the total material cost. You do the same thing for direct labor. You also have direct expenses. You have variable production overhead. You can have opportunity cost. Opportunity cost is also relevant. So you can also have you can have relevant or incremental fixed cost. That's one. You can also have direct, okay, direct / specific or attributable. Attributable fixed cost. Let me push it to the front. Attributable fixed cost. All right, these are relevant cash flow. It is also possible, you may be given selling and distribution expenses. Selling and distribution expenses are also relevant. It could be variable selling expenses, it could be fixed selling expenses. Any selling expenses are relevant costs because if you don't incur the cost, you won't be able to make the sales. That's the interpretation. So I will then come here, selling and distribution expenses. So these are relevant cash flow that you need to take into consideration. So of course, it's not compulsory that examiner will give you all of them on the day of your exam in a question. No, so whichever one that you have is the one you are going to consider. But just note that any expenses that you are going to incur that will be directly attributable to the segments, then you need to consider it. Remember what I told you when we started. I mentioned to you that short-term decision represent the application of marginal costing technique and relevant costing principle to analyze a course of action in making managerial decision. So generally, all what you are going to do under short-term decision, you are going to be referring to, you are going to be making use, you are going to be considering relevant cost across board. And that's why we started with operating statement, then relevant costing, because I know this is fundamental to whatever you want to do under short-term decisions. All right. So at the end of the day, when you add up all the relevant costs, you have this guy here. So the sales value minus total relevant cost will give you either a positive contribution or a negative contribution. So after you have done this calculation, you need to make a decision, right? You need to make a decision. You then state your decision rule. What are the decision rules? Let's go there. Now, if according to the statement you have above, if there's positive contribution, your decision should be do not delete the segments. All right. If it is positive contribution, your decision should be that do not delete the segment. Why? Because the segment is contributing positively towards the recovery of the company's general fixed overhead and net profit. Because when you want to determine your profits, you need to less the period cost, the fixed cost. You need to less. If the segments produce a positive contribution, your advice should be that they should not delete the segment because it is part of that positive contribution will help the company to recover part of the general fixed overhead that have been incurred. All right. So that's what you need to do. Under positive contribution, your advice should be that please do not delete it. Then, if it is negative contribution, your advice should be that the segment should be deleted. Of course, because a negative contribution will impair the organization's total profits. It will shrink. When you have a negative contribution, it will make the profits, the bottom line, to be terribly bad. All right. So like I was trying to say, under the negative contribution, your advice should be that the segment should be deleted. Of course, this is expected to now increase the total net profit of the organization. All right, because a negative contribution will generally impair the net profits, and that's why it is better once the segment produce a negative contribution, you advise that you should delete it. But under zero contribution, what are you supposed to do? When there is zero contribution, that is total sales, your cash inflow equal to the cash outflow, your total sales equal to the total relevant cost of the affected segment, then your decision will be, your advice should be that the company can either delete or not delete the segment depending on other qualitative factors. Therefore, what are the qualitative factors you need to take into consideration under deleting of a segment? So the number one factor that you need to take into consideration, remember I told you that the qualitative factors are those factors that cannot be expressed in monetary terms. Any factor that you cannot quantify, these are qualitative, non-monetary, non-quantifiable factors that you need to take into consideration. Number one factor is to consider the impact of the closure decision on the company's turnover. Okay, you need to consider the impact of the closure decision on the company's turnover, especially as it has to do with the fact if the product or if the segment to be deleted is jointly demanded with the company's other product. Say, for example, when you say joint demand, a joint demand is a product that must be used together. All right. For example, board and marker. Without board, marker is useless. Without marker, board is also useless. Car and petrol. If a car does not have a petrol, then of course the car cannot move. All right. So those are what we call a joint demand. Therefore, you need to consider the impact of the closure decision on the company's turnover, especially if the affected segment is jointly demanded with company's other product. Say, for example, you have product A and B, product A, B, C, product A, B, C. Like I mentioned the other time, there's a profit or loss for each of the products. There's profit or loss. This is profit of 5, profit of loss of 2 million, for example, loss of 2 million, then profit of 3 million. Now, you can see that because product B is operating at a loss, the company will now be thinking of closing down product B. So as a result of this, if product B and product C are jointly demanded, if product B and C are jointly demanded, that means since the company is contemplating in closing down product B, and you know that without product C, you cannot use product B. Without product B, you cannot use product C. A customer that wants to buy, because customers usually buy the two together. If you are not producing B again, then your customer will not come to you. Customer will go to your competitor where they can buy the two together. And as a result, the company will be losing revenue. All right. So, God help you. If the customer gets to your competitor and they receive better and quality services, they are not coming back to you again. And the company will continue to lose revenue, that is turnover. That is what we are saying here. Then number 2, the impact of the closure decision on the company's reputation should also be taken into consideration before final decision is taken. All right? Because customer may be saying it among themselves that, oh, this customer does not do this, does not do that, doesn't even consider the impact on the customer before the final decision was taken. So begin to say all sorts of negativity about the company on social media or anywhere. So before the final decision is taken, it is important to consider the effects of that closure decision on the company's reputation. All right. Then number 3, the impact of the closure decision on workers' morale, especially as it affects productivity, should be taken into consideration. You know, what I simply mean by that is the fact that, if the company decide to close down, say for example, this product B that is operating at a loss, if the company decides to close down product B, other workers that are operating on product A and C will become apprehensive of job loss because they can, among themselves, they will be saying that, oh, okay, if the company can ask our colleague or these people to go now, what will be our fate tomorrow? The company can come, they can come tomorrow, can wake up tomorrow and say, you two, you should be going, or they don't want to be producing product A or product C again, and we are going to lose job. So at that moment in time, there will be low productivity because there will be no motivation for the workers to put their optimal performance. All right, there will be no motivation. So as a result, there will be low productivity. Once there's low productivity, there will be contribution loss because the top level performance will not be there. So that is the essence of considering the impact of the closure decision on the workers' morale. Then number 4, you also need to consider the perspective of the company's shareholders on the closure decision. It may well be that it's one of the shareholders that introduced the products. All right. Now that you don't want to be producing it again, what will be the reaction of the shareholder? It may well be that it's one of the shareholders that introduced the product. So if that is the case, what that means is that you want to jettison my own idea since you are no more producing it, and that can create a bad blood among the shareholders or the directors of the company. All right. So before the final decision is taken, it's expected that the decision to close down the the segment should be brought to the attention of relevant stakeholders. Let them be aware of the reason why the management is thinking in that direction. Then number 4 or number 5, you also need to consider the reaction and the perspective of the company's creditors. All right. How would the creditors interpret the closure decision? Will the company pay back, I mean, the money, the loan, or the goods that the material that the company has taken on credit? How would they be able to pay back and all of that? See, there are so many issues that surround that. But again, it is important to consider the reaction as well as the perspective of the company's creditor to the closure decision. Not only that, how would the company handle all negativities that may arise? All right, negativity in form of litigation and also unionism. All right, because when you want to delete a particular segment or a particular product line, the workers may stand against it. They may say, no, this cannot happen, especially for an organization where unionism is allowed, where there's union, because the union may rise up against the company, and then that may prove difficult for the company to achieve. As a result of that, the company must think about any negativity that may arise, because the workers can go on social media and be commenting in such a way that will damage the reputation of the company. And then, of course, I have several practical examples that I can talk on that relates to a similar thing like that, but I don't want to delve into that because of time. All right. Then again, instead of outright closure of this segment, is it possible to switch the resources that the company normally use on the affected segment to producing more venture? I mean, to produce a venture that is more profitable, right? So the resources, for example, on this product B, there are people already operating on product B. There are machine, there are equipment. All right. There are other resources that are being used under this product B or segment B. So instead of outright deletion or discontinuance of product B, can the company switch all those resources, people, equipment, and all of that to producing a more profitable venture? All right. So you also need to take into consideration that decision. So these are some of the things you need to consider before the final decision is taken, as far as the qualitative factors under deleting of a segment. But what is important is that on the day of your exam, don't just go and memorize. Don't just go memorize all what you have here. No, it doesn't work that way. That would be too ordinary. You need to link your qualitative factor with the question. You relate your qualitative factor with the question. So you mention the name of the company when you are stating your qualitative factors. You also link it with the question, with the segment, with that particular segment that the company is thinking about closing down. So don't just make it too generic. Link it. Don't memorize. Don't cram and dump it to the examiner. No, it doesn't work that way. You will not hear your full mark. You will not hear your full mark, because if everybody is just memorizing and then cramming it, dumping it on that day, it's as if it just it should be too ordinary. Don't do that. You have to relate it to the question. So these are all the discussions around deleting of a segment. So at this point, let's have an illustration. We are going to have just 2 illustrations. Then under make or buy, another 2 illustrations. Under acceptance or rejection, 2 illustrations. That's the approach that we are going to adopt, because we don't have the time. Okay, then let's move on. Let's move on. Yeah. Let's start with illustration number 1, please. I need somebody to read first. I need somebody to read first, please.
Adigoluja.
Adigoluja. Okay.
Adigoluja.
Go ahead.
Adigoluja manufactures 3 brands of ice cream: chocolate, vanilla, and strawberry.
I don't know if it's my network, because I can your voice is breaking. I don't know if it's my network or from your side. Hold on, Uche. Hold on, Uche. I can barely hear you. Uche, hold on.
Income. I believe the networks are so some should my
Uche, hold on, hold on. Like I said, I can barely hear you. It's breaking. So I don't know whether it's my network or your own. All right. You can do it again. Try again.
Sir, I think someone else should read it. My network has been off and on, so I think
Oh,
someone
it's
else should.
okay. It's okay. Emirad, I miss your voice. Emirad, are you there? Okay.
Okay, can I read?
Good
Okay,
evening.
Oliver. Oh, okay. Yes. Oliver, you are going to read the next one. Emirad, let Oliver read this one. Thank you.
All right. Good evening, everyone.
Good
Illustration
evening.
1. Adebolucha manufactures 3 brands of ice cream, chocolate, vanilla, and strawberry. The present net annual income for these is, as stated below in the table. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of fixed cost of vanilla are direct fixed costs which would be saved if production ceased. All other fixed costs would remain the same. Required: A. Should the company drop the sales of vanilla? B. Suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream banana, which will sell or
Four.
okay,
Which will
which will
sell
sell
for.
for 50,000 naira and incur variable cost of 30,000 naira, an extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? What are the non-quantifiable factors that the management of Adebolucha should consider?
Thank you, Oliver. That is
You're
the
welcome.
question. Yes, examiner is asking you, should the company drop the sales of vanilla? So by these requirements, you should know that this question relates to deleting of a segment because examiner asks you, should the company drop the sale of vanilla? So that particular statement should call your attention that this relates to deleting of a segment. So since the company has asked this particular requirement, it means that vanilla is operating at a loss. When you look at the income statement prepared by the company, you notice that vanilla generated a loss of 3,000 naira. And that's why the management is thinking of closing down vanilla, okay, of dropping the sale of vanilla. So before the final decision is taken, it's expected that you are going to carry out the economic analysis by comparing the sales value from vanilla with the relevant cost of making vanilla, whether it will result in positive or negative contribution to the organization. So let's stop sharing this and move to the working notes quickly. Okay. Our solution to illustration. I think that's illustration number 1. Adigboluja. Okay. Number A, requirements. Examiner is asking us whether the company should drop the sales of vanilla. So, like I told you, you are going to use income statement or contribution margin statement. You are going to prepare income statement or contribution margin statement. Whichever one you use is the same thing. All right, I can say contribution margin statement. Okay. You create your 2 naira signs for debit and credits. The first item based on the format is the sales value. I will then go to the question, what's the sales value for vanilla? Give it to me. What's the sales of vanilla?
40,000 naira.
40,000 naira.
40,000 naira. Then you compare this with total relevant cost of making vanilla. So according to the question, we are given variable cost, which means that all the direct material, direct labor, direct expenses, variable overhead, everything have been added together to get the variable cost. So just put the variable cost there. How much is the variable cost for vanilla?
25,000 naira.
25,000 naira. Then examiner also told you that there is a direct out of the fixed cost of 18,000 naira. 5,000 out of that is a direct fixed cost that will be saved. All right. So direct fixed cost is a relevant cost. So I'll come here direct fixed cost. We are told 5,000 naira will be saved. This is 30,000. This is 30,000 minus 40,000, 10,000. So this represents contribution. The sales value is more than relevant cost. The benefit outweigh the total relevant cost. So examiner is now asking you whether the company should drop the sales of vanilla. So our decision should be that decision. And I told you, if it is positive contribution, your advice is that they should not drop the sale of vanilla. So I will then come here, Adigboluja. Adigboluja should not drop the sales of vanilla. This is because vanilla is contributing positively towards the recovery of the companies, general fixed overhead and net profits. That's our decision. Okay. Then number B. Number B part of the question, you are asked, suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, banana, which will sell for 50,000 naira and incur variable cost of 30,000 naira and extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? Now, what examiner wants you to do here is to prepare another contribution margin statements for banana. Then at the end of the day, you compare your total contribution of banana versus total contribution of vanilla. Anyone that is higher, that's what your decision will be. Okay, so let's do that quickly. Number B, contribution margin statements. For banana. Okay. Sales value from banana, according to the question, is 50,000 naira. Then you compare with relevant cost. Okay. Under the relevant cost, we are given variable cost of 30,000 naira of 30, is it 30? Yes, 30,000 naira. Variable cost, 30,000. We are given extra direct fixed cost of 6,000. 30,000 plus 6, that's 36,000. Therefore, contribution is 14,000. So examiner is now asking you whether the company should switch resources to producing banana. Of course, the company should switch. So your decision should be that decision. Okay. Is then say Adigbo Luja. Adigbo Luja should switch resources of producing vanilla ice cream to producing banana ice cream in order to earn additional profits of 4,000 naira. Extra profit of 4,000 naira, that is 14,000 minus 10,000. All right, that's how we arrive at the 4,000. That is for that. So far, any question? Before we go to the C part of the question, we talk about qualitative factors. Any question?
Please, how did you get that 10,000?
10,000 is the contribution we got for vanilla. You know, in vanilla, our contribution is 10,000. So you compare, if you switch resources of producing vanilla to producing banana, the total contribution will increase to 14,000. So since the company will earn more contribution under banana, it's better they switch the resources. At least the company will achieve additional 4,000 naira profits. Okay? All right. So number C part
Thank
of
you, sir.
the question. You're welcome. So number C part of the question, the examiner is asking you to what are the non-quantifiable factors? Okay? So examiner call it non-quantifiable factors that the management of Adigbolija should consider. All right. Let's call it non-quantifiable. It's the same thing as qualitative factors. So, but let's call it what the examiner has called it. Non-quantifiable factors. Okay. Now, remember I told you earlier today, saying that you don't just memorize all those qualitative factors I mentioned, about 6 or 7 of them. You need to relate it with the question. So on the day of your exam, if you have this kind of a question, at least you should be able to give minimum of 5 qualitative factors, all right, in relation to the segment. So the first item will be, how does it affect the turnover of the company? So let's take that. You can say the Adigboluja. Don't forget what I said. You have to link your qualitative factor with the question. Don't make it generic. Relate it with the question. So I will say Adigboluja should consider the impact of dropping the sales of vanilla on the company's turnover especially if vanilla ice cream is jointly demanded with other varieties of the ice cream or with other ice cream varieties. Okay, so that's that. You can see it's different from the one I mentioned to you the other time when I was giving you the notes by saying that, oh, the impact of the closure decision should be considered on the company's turnover, especially where the affected segment is jointly demanded. You can see now, I link it with the products. I link it with the segment. I mentioned the name of the company, so it's not generic. It's related to the question. This is what I'm trying to achieve. Then number two, you can talk about taste and you can say the taste, customer taste and preference. Let's do it this way. Customer's taste and preference should be considered before the final decision is taken. Okay, what do I mean by this? You know, when it comes to ice cream, there are different tastes. All these varieties of ice cream have different tastes. The taste of vanilla is different from the taste of banana, different from the taste of strawberry or chocolate. There are some customers that they like vanilla. They like it. Like for me personally, I don't like licking strawberry ice cream. I like vanilla. So if you now say you are no more producing vanilla, the customer segment like me, it means that since you don't have vanilla, I will go to elsewhere where I can get vanilla. There are some customers that they like to combine the varieties, vanilla with strawberry or vanilla with chocolates. There are some customer type like that. So if you are no more producing, you are no more producing, or you are contemplating in dropping the sale of vanilla, have you taken into consideration customer taste and preference? All right, because if the customer taste and preference is not taken into consideration and you finally drop the sale of vanilla, then of course, this may also affect the revenue of the company because customer will leave you and go to your competitor. Yeah. Okay. Then number three, the impacts of dropping the sales of vanilla on workers' morale should be taken into consideration, consideration. Okay. This is because other workers operating on other varieties. Let me write this. This is because workers operating on other ice cream varieties may become apprehensive of job loss. May become apprehensive of job loss. Okay, which may lower productivity. Which may lower productivity. So the company needs to put human face before the final decision is taken. So there are so many factors. You can do like 5. I've shown you an example how to link it with the question. So that's the essence of me writing it down. All right. So you can talk about the fact that how will the company manage the negativity that may arise from the dropping of sales of vanilla, negative externalities, negativity in relation to litigation or junior activism and all of that. So it's part of the factors you can take into consideration. The reaction and the interpretation or the reaction and perspective of the shareholders of the company. It may well be that it's one of the shareholders or it's the shareholder that introduced the vanilla. So all of these things, just put it there. And that's it. So I've shown you the example. Let's move on to the next one. Yeah, that's end of the question. Let me know if you have any question for me before we switch. Okay. So let's have another illustration in the absence of no question. Let's have another illustration. So you are going to solve this illustration number 3 for me. Cash and Pick Limited as an assignment, and you have to submit not later than Thursday. This is an assignment for you. Then submission. In fact, Wednesday. Submission is Wednesday. Oh, sorry. I'm still writing. I wanted to write January. It's February. February 5.
Please,
20,
sir, Thursday.
It's Friday. Sorry, it's Wednesday.
Please, Thursday.
Thursday is not feasible for me.
Okay, sir.
I'm going to mark it. I will mark your assignment. I will do for Isola. I will do for VI. So if you submit Thursday night, that means I only have Friday to do the to mark it, and which is not convenient because I also have some other things I will do. So and that's what I said. Wednesday, yeah, please.
Yeah, so,
Of course,
Mr.
submission
Joshua.
is 11:59. You have to submit 11:59 p.m. Latest 11. If you submit 12 a.m., I will just acknowledge I won't do anything. So you have to submit on or before 11:59. Yes, talk to me, Oliver.
Yeah,
No,
Mr.
not
John.
me.
Yes.
Yeah, sir. For those of us that doesn't have the material, so how are we going to get the question?
I
For
will
someone
share
like
the
me.
question. I will share the question.
All right.
Do you belong to PM group?
No, I've not joined P. I
Not
just
yet.
joined.
No worry.
This
I
is
will
my
share the
first
question on
time.
the general group. Okay. I will share the question on the general group.
All right. Thank you, sir.
You're welcome. Somebody send a chat. Thursday, no, Thursday is not feasible. Not, it's Wednesday. It's Wednesday. Okay. Yes. In this particular illustration, the examiner did not give us the income statements that will enable you to know the reason why the company is thinking of closing it down. So let's solve it. Illustration number 2, please. I need somebody to read this. Yes, Emirad, you wanted to read the other time. Yes, thank you.
Ife Limited, making a simple product, has a factory in Lagos and distributes the product through 3 depots in Lagos, Benin, and Kaduna. It is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread are as follows: Lagos, 70,000 units; Benin, 20,000 units; Kaduna, 10,000 units. Standard cost of production are direct material, 4.8 naira per unit; direct wages, 3 naira per unit; factory variable overhead, 140% on direct wages; factory fixed overhead, 400,000 per annum. The cost of selling and distribution incurred by the depot are estimated as follows: Lagos, for fixed costs, Lagos, 80,000 per annum; Benin, 50,000 per annum; Kaduna, 30,000 per annum. Variable selling expenses, Lagos, 5% of sales value; Benin, 8% of sales value; Kaduna, 10% of sales value. From the budget for the business prepared from these figures, management is considering desirability of closing the depots and selling organizations in Benin and Kaduna. If this is done, it is expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. Required: prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. B. Redraft the statement prepared above using contribution margin approach. C. Prepare a statement using the historical approach to show the net profit of the organization after closing down the 2 depots. Advise the management based on the income statements prepared above.
Thank you very much, Emirat. Yes, that is the question. In the A requirements, you have to prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. Remember what I told you. Remember what I told you, that management will only be thinking of closing down a depot, or sorry, of closing down a segment if the segment is operating at a loss. So in this particular question, examiner did not give you income statement that will show the profit or loss of Benin and Kaduna depot. And that's why the company is now asking you, or sorry, the examiner is asking you to prepare a budget indicating why management is thinking of closing Benin and Kaduna depot. So let me stop sharing this and move to the working notes. Okay. So solution to illustration number 2. All right. The name of the company is Ife Limited. Number A, examiner says you should prepare a budget statement. Whether it's a budget statement, historical statement, income statement, operating statement, whatever statement is the same thing. All right, it's the same thing. So I will come here. Examiner has mentioned budget statement, so I use budget statement. Okay. Now, before you put your pen to paper, you must articulate how you are going to present your work. You need to articulate your points. All right. In this particular question, we have 3 depots: Lagos, Benin, and Kaduna. So you need to create additional column for total. That total will represent for the company as a whole. So you come here, Lagos, Benin, Kaduna, then total for the organization as a whole. Examiner now told you that for the activity level, we are told that 100,000 units will be produced and sold. All right, 100,000 units will be produced and sold. And then the sales are spread as follows: 70,000 units for Lagos, okay? 70,000 units for Lagos, 20,000 for Benin, and then 10,000 for Kaduna. Of course, the total unit is 100,000. So that's the activity level. So I can come here, my figures will be in thousands to save time. If I don't write it under, I can write it in front of the budget statement. So that will also save time that will save my time. All right. So the first item, I want to prepare income statement. The first item will be my sales value. I will then go to the question, what is the selling price? According to the question, selling price given to us is, I think 140, is it 20 naira? Selling price is 20 naira per unit. So the company sold 70,000 for Lagos. So 70 multiplied by 20 will give us 1,400. 20,000 units is sold in Benin. 20 multiplied by 20 naira will give us 400,000 naira. For Kaduna, 10,000 units is sold, multiplied by 20 naira. That's 200,000. So add everything together, that will give us 2,000. That's my sales. I need to
That's
compare it.
70,000 times 20 is 1.4 million.
Yes, that's what we have there.
Okay.
That's what we have. Relevant costs. Our figures are in thousands, so you know.
Yes, it's
Okay.
noted, sir.
All right. So the next item, I will then go to the question, am I given direct material? Yes, there is direct material of 4 naira 80 kobo. Direct material of 4 naira 80 kobo. So in this case, I will say direct material at 4.8. We're also given direct wages. Direct wages, DW, because I'm going to need that DW for the next one. We are told that direct wages is how much? How much is direct wages?
3 naira.
3 naira. So at 3 naira. After direct wages, what's the next one?
Factory variable overhead.
Factory
Variable overhead.
variable overhead. How much is it?
We are told it's
140% on direct wages.
Okay, 140% of direct wages. All right. After factory variable overhead, which one is next?
Factory fixed overhead.
Factory fixed overhead is irrelevant. It's not a relevant cost. Yes.
We have
Next,
variable selling expense.
variable, we have selling expenses. The first one is a fixed selling expenses, isn't it?
Yes.
So we have fixed selling and distribution. Is it selling expenses or fixed selling and distribution?
Selling expense.
So we are told that, let me see. We are told that the
Variable
cost
selling
of selling
expenses.
and distribution incurred by the depot. Okay. So fixed selling expenses is yeah, that's that. Then we also have variable selling and distribution. All right, so let's multiply. Under Lagos, 4.8 multiplied by 70. What do you have? 4.8 multiplied by 70.
336.
366.
336.
366.
336, okay. 3 multiplied by 70. 3 multiplied by 7,
210.
that's 210. Then we are told that factory overhead is 140% of direct wages. So what is 1.4 of 210?
294.
294. Okay, 294. What's the fixed selling and distribution expenses for Lagos?
80,000.
80,000. Here is
Yeah,
80. 80. Then variable selling and distribution for Lagos.
5% of sales value.
Oh, okay. Let's go and do working for that. 1, 2, then yeah, 4. Workings. Working number 1, variable selling and distribution expenses. Lagos, we are given 5%, and we sold 1,400 for Lagos. For Benin, selling and distribution expenses is 8%. We sold 400,000 in Lagos, sorry, for Benin. Then for Kaduna, 10% of the sales value of 200. So here is 20, here is 70, here will be 32. So when you add it together, that's 122,000. That's 122,000. So let's go and post. So here is 70. And let's do for the rest. What's 4.8? 4.8 of 20. That should be 96. Here is 96. 4.8 of 10, 48. 4.8 of 100, that's 480.
480.
Okay. Then 3 multiplied by 20, that
That's
will be
60.
60. 3 multiplied by 10 will give us 30. 3 multiplied by 100 will give us 300. Then 1.4 of 60 is what? 140% of 60.
84.
84. 1.4 of 30. 1.4 of 30. 42. 1.4 of 300.
420.
That's
420.
420. Okay. So that's that. Then fixed selling and distribution for Benin is how much? As given in the question.
50,000. 50.
50,000.
30.
30. That's 160. Then variable selling and distribution for Benin is 32. Variable selling and distribution for Kaduna is 20. So A is 122. Any other costs? That's all. Yeah. Find me the difference. 6 minus the rest. 6 minus relevant cost for Lagos. What do you have? Yeah. 336 plus 210 plus 294 plus 150 minus 1.4. That will give us 410, right?
Yes, sir.
So do the same thing for Benin. 96 plus 60 plus 84 plus 50 plus 32 minus
No,
400. What do you have?
Kaduna is 30.
Kaduna is what? 30.
30.
Okay. Here will be 78, right?
70. Yes, sir.
Okay. When you add it up, that's 518. So total contribution is 410 for Lagos, 78 for Benin, 30 for Kaduna, and then 518 for the organization as a whole. Remember, when we did operating statement, I mentioned to you that marginal costing technique is an accounting system whereby the period cost or the fixed cost incurred are written off fully from the aggregate contribution. So the contribution you have here, this positive contribution represents the aggregate contribution. So we need to less period cost. And our examiner has told us in the question that there is factory fixed overhead. We are told there is a factory fixed overhead of 400,000 naira per annum. That 400,000 naira per annum will need to be apportioned to each of the segments. So I will come here, factory fixed overhead. So let's go and apportion it. Now, when you are faced with this kind of a question, how do you apportion your fixed overhead? You are going to look for something that is common to all the segments in this case. You look for something that is common to them. If you can't find anything that is common to them, you can either use the sales value. If examiner did not tell you how you are going to apportion it, you can use the sales value. But in the question, we have something that is common to them, which is the unit. Because examiner told you in the first paragraph of the question that the company will produce and sell 100,000 units and will be distributed to Lagos, 70 to Lagos, 20 to Kaduna, sorry, to Benin, then 10 to Kaduna. That is the basis you are going to use to distribute the fixed overhead. So number two, working number two, fixed overhead apportionment. Okay. Now, we are given fixed overhead of 400,000 naira. So distribution, we need to distribute this. All right. So we are using the number of units as the basis of distribution. So for Lagos, the number of units allocated to Lagos is 70. The total unit available is 100,000 multiplied by 400,000 naira. What you get?
280.
280. For Benin, units allocated to Benin 20 divided by total unit of 100 multiplied by 400. This will give
80.
us 80. Then for Kaduna, 10,000 units, 100,000 multiplied by 400,000. This will
40.
give us 40. When you add it up, that will give you 400,000. That's the total factory fixed overhead. That's it. So let's go and consider that. The essence of considering the fixed overhead is because we want to determine profit. Other than that, of course, we are not considering relevant, it's not a relevant cost, but because we need to determine profit. So that's why you have to do this. So here is 280. This is working number 2. All right. This is working number 1. 280, 80, then 40. The total is 400. So give me the hiatus. For Lagos, it's 130. For Benin, it's -2. For Kaduna, -10. Here is 118. That's it. That's end of the first requirement. This represents net profits or loss. So examiner is asking you in the A requirement of the question that you should prepare a budget for the company from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. So we have prepared the budget statements and we have shown the reason why. Is because we see that from our calculation, Benin and Kaduna depots are operating at a loss. There is a loss of 2,000 for Benin, loss of 10,000 for Kaduna. That's why the company is thinking of closing down Benin and Kaduna depots. You remember when we started, I mentioned to you that the only reason that we make management of thinking of closing down or of discontinuing a particular segment is if the segment is operating at a loss. So that is that. Let's move to the next one. Number B, requirements. You have to redraft the statements prepared above using contribution margin approach. Now, when you are using contribution margin approach, you are not expected to consider, for all the segments, you are not expected to consider general fixed overhead because this one has nothing to do. The general fixed overhead cannot be attributable to the segment because when you are using contribution margin approach, your focus is on sales value and then the relevant cost associated with the segment. You are less concerned with general fixed overhead. However, for the company as a whole, the entire 400,000 naira will go to the company as a whole, but it's not going to be allocated to each of the segments. So let's move on. Number B part. I will say using contribution. Examiner says you should use contribution margin approach. That is, you prepare contribution margin statements. So like I said, when you are preparing the contribution margin statements, you are going to stop at contribution for each of the segments, all right? You don't consider profits under each segment when you are using contribution margin approach. So here we have Lagos, Benin, Kaduna, then total. Okay. I don't need to write activity level again. I've done it in the first one. So I can just come in and say, my figures are in thousands. This will save time. So I have sales value. The sales value for Lagos is 1,400, 400, 200, then 2,000. I will compare this with relevant cost. So we have direct material. Please don't go and be using a shortcut because you have calculated relevant cost previously. You now say total relevant cost. Lagos, 990. Benin, so much, whatever. Kaduna, so much. Because you are looking for shortcut. If you do that, you are also going to get short answer. You are going to get short marks. So you have to do the right thing. This is not where to be looking for shortcut. So direct material. Direct material for Lagos is 336. Direct material for Benin is what?
96.
96, then 48.
48.
The total is
480.
480. Then we have direct wages.
210,
210,
60,
and then
30.
30. When you add
Altogether
it up,
300.
300. Then we also have, what's the next one after direct wages?
Factory overhead.
Factory
Variable
overhead.
Factory variable overhead.
Overhead, yeah.
140 of direct wages.
Okay. Factory variable overhead. For Lagos, we got what?
294,
294.
84, 42,
42. That's
and
420.
420, yes.
Then we also have fixed
Selling price expenses.
selling and distribution.
Selling expenses.
Then what do you have for Lagos?
70,
80.
32,
80.
80 is the first one.
Yeah.
80, 50,
50.
30,
Okay. Yeah.
and then 30. 160. Then we have variable selling.
variable. Yeah, that's well. We have 70
Variable.
for that.
Okay, 70,
32,
32,
and 20.
20.
Altogether, 122.
122. Okay, so that's all. So add it up. So this one give us 410. This give us 78. This give us is it 30? Yes, 30. Then we have 518. So this represents the contribution. You know, this one is just like we are repeating what we have done previously, but it's not. So in this case, all I need to do is to close this one because examiner asks us to use contribution margin approach. You don't charge fixed costs. When you are using contribution margin approach, you are not determining, your focus is not to determine profit. Your focus is on contribution margin for each of the depot or for each of the segments. However, the company has already incurred fixed costs of 400,000 naira. So I will then come here, fixed factory overhead, 400,000. Take it straight to the under the company as a whole. All right. The difference here is 118. This is what examiner wants you to do. This is the net profit. That's that. That answers the number B part. Then number C, you have to prepare a statement using historical approach to show the net profit of the organization after closing down the two depots. So examiner wants you to demonstrate the impact of the closure of Benin and Kaduna on the company as a whole. All right. When you close down Benin and Kaduna, it means that only Lagos depot will subsist. So what will be the impact on the overall net profit of the organization? That's what the examiner wants to test here. So if that is the case, number C, historical approach. Historical statement. Well, I've told you whether it is historical statements, budget statements, income statement, operating statement is the same thing. So you can just say historical statements for Lagos or after closing down Benin and Kaduna, after closing down of Benin, of Benin and Kaduna depots. Okay. So you repeat all those figures you have for Lagos alone. You know, when you close down Benin and Kaduna, that means only Lagos will continue operation. So the sales value for Lagos is 1,400. Relevant cost for Lagos. Direct material. For Lagos is 336. Direct wages. For Lagos is 294. Is it? No, 210. 210. Then we have factory variable overhead for Lagos to be 294. Then we have fixed selling and distribution expenses for Lagos to be 80,000. We have variable selling and distribution expenses for Lagos is 70,000. When we added everything together and we got 990. This is 990. 990 minus 14 will give us 410. So this represents the total contribution for Lagos. So from this contribution of Lagos, excuse me, examiner wants you to determine net profits after closing down of Benin and Kaduna. Since you want to determine net profits, then you need to less the period cost. Let me rewrite that, 410. Then you less factory fixed overhead, 400,000. Well, only Lagos will bear the entire 400,000. Since you are no more producing Benin and Kaduna, so only Lagos will bear everything. Therefore, here will be equal to 10. This is the net profits after closing down of Benin and Kaduna. So that's what the examiner wants you to do in the C requirement. Lastly, you are to advise the management based on the income statement prepared above. You can see in this particular examiner is now saying income statement. Meanwhile, in the A, it was called budget statement. Number B, you have to use, of course, contribution margin statement. Number C, you have to use historical approach. Whatever the case may be, is the same thing. Now, what should be our advice? All right, what should be our advice? You recall that currently the net profit of the organization is 118,000 naira. If the company does not close down Benin and Kaduna depot, the net profit is 118,000. If the company closed down Benin and Kaduna depots, the profit will drop to 10,000 naira. So what should be our advice? Should the company close down Benin and Kaduna?
No.
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 No, they shouldn't. They shouldn't do that. The company should not close down Benin and Kaduna. So let's take it down. So advice. If it's Sinachi Limited should not close down Benin and Kaduna depot because they are currently contributing. They are currently contributing positively towards the recovery of the company's general factory fixed overheads of 400,000 naira. Okay. If Benin and Kaduna depots are closed down, comma, the overall profits of the company will drop to 10,000 naira from the current 118,000 naira. This means that the reduction in profits, of 108,000, that is 118 minus 10,000, represents the positive contribution, of Benin and Kaduna depots. So when you add up when you look up in the contribution of Benin and Kaduna, you see that Benin has 78,000 naira contribution. Kaduna has 30,000. When you add the two together, that's 108. The profit has dropped to 10,000 naira now. So that means that the positive contribution Benin and Kaduna is what represents the reduction in profits. And that's why it is advisable that Adigboluja, Ife Sinachi should not drop the sale of, should not drop or should not close down Benin and Kaduna depot. So that is that. That's end of the question.
Sir, excuse me,
Yes.
sir. I have a
Talk to me.
question.
Go ahead.
Yeah, I will take us back a little bit. I saw something in the requirement A and requirement B. So I need a clarification on both
Go ahead.
solutions. Okay, for requirement A now, you apportioned a factory fixed overhead,
Yes.
but in the requirement B, you do not apportion, you just use it direct. So I want to know the difference. Why did we apportion for requirement A and we did not apportion for requirement B?
The requirement A is very glaring. Examiner did not give to you income. You are told in the question that examiner is thinking of closing down Benin and Kaduna depot. Therefore, you are asked to prepare a budget statement indicating why management is thinking of closing down Benin and Kaduna. And I've told you the only reason that we make management to be contemplating of deleting of a particular segment is if the segment is operating at a loss. So income statement that will show profit or loss is not given to you. So that's why examiner wants you to calculate that budget statement that will show profit or loss. Now, when you want to determine profits, you need to first of all determine your contribution. After your contribution, then you less your fixed cost for you to have your profit. So the fixed cost given to you in the question is a general fixed overhead. It's a general fixed overhead. So you need to apportion, you need to share it. When you say you apportion, that means you are sharing it, you are distributing it across all relevant segments. So that's why we share it in the first one. In the second requirement, examiner did not say you should calculate profits. You are not asked to determine net profits. Examiner only wants you to use contribution margin approach. And I told you, using contribution margin approach, you are supposed to stop for each of the segment, you will stop at contribution. but the organization as a whole, the company as a whole, is the one that will bear the entire 100,000 to maintain the existing profit level. All right, that's why we did not distribute it in the second one, in the B part. Is
Okay.
it?
Okay. So it's clear now
Yeah.
because in the B part now we're just meant to find contribution.
Yes.
We don't need to find profit. All right.
Not at all.
All right. Thank you. Thank you.
And also, if you stop at, even if you don't include the fixed overhead in the second part, examiner cannot penalize you because you have to use contribution margin approach just to maintain the existing profit level. That's why it is expected that you are going to deduct the
The
400,000
fixed
from the
overhead.
company as a whole. Yes.
All right. Okay. Thank you. It's clear now.
You are welcome. So any other question before we move to make or buy? Okay. So let's move to make or buy. And then again, please, for you to be able to earn your full mark, even though in this question, the examiner did not ask you to state your qualitative factor, I've told you, anytime you are making a calculation under short-term decisions, you have to assess, or you need to analyze critically in those two perspectives, economic and also the qualitative factor. So in this particular question of Ife Sinachi, it is expected that you are going to state your all relevant qualitative factors, even though the examiner did not ask you, so that you'll be able to earn your full mark. All right, so it's not compulsory that examiner must ask you, but you have to state your qualitative factors. I've already given you a clue on how you can do it, but what is important is that just pick all those elements when I was giving you the notes, all those elements, all those 7 elements I mentioned. So you can just you memorize them, okay? You memorize them, have the understanding, then you link it with the question one after the other. Pick the first one, okay? Talk about turnover, the impact of the closure decision on the impact of closing down. You can say the company, you can say Ifesinachi should consider the impact of closing down Benin and Kaduna Depot on the company's overall turnover. Okay, so you can stop there. Pick another one. Talk about the reputation, how it's going to affect the reputation of the company. Talk about workers' morale as it affects productivity. Link it with the question. This is what we are talking about. Especially this, this one has to do. In fact, this is in this particular question, the issue of the negativity. This company should consider how the company will manage the negativity that may arise after closing down Benin and Kaduna Depot. Hey, there will be issue. If you close down Benin and Kaduna Depot, workers will not. There will be issue. There will be activism in those depots. All right, there will be litigation at the end of the day. All right, the whole depot for that matter. No, so these are the things you are expected to talk about. All right, just link it with the question and you are good to go. All right, so move on. Let's go to
So just before
yes.
you proceed, please, those 7 items you mentioned, one of them is sales.
One of them is what?
Sales. One of them is sales.
I
I
didn't
didn't get
mention
it.
sales. I said turnover.
Sorry,
Turnover
turnover.
is the same
Turnover.
thing as revenue. Yes, you can say
Sorry.
yes.
Sorry.
Yes.
Revenue.
What? Yeah. What
Revenue.
about it?
No. I didn't get those 7 points fully. It's just for me to note them down as a basis.
Okay. Oh, I mentioned it. And when I was reading it, I mentioned it that the company should consider the impact of the closure decision on the company's turnover, especially where the segment is jointly demanded with the company's other products. I mean, so that's when you are listening to the video, you are going to get that. All right.
Okay then. All right.
Mm.
All right. 7.
So let's go to make or buy decisions. Okay. Let me stop sharing this. So let's talk about make or buy decision. Okay. Oftentimes, management may be contemplating whether a particular raw material, sub-assembly, or components required for the production of the company's final products should be manufactured internally or contracted to an outside supplier. So this kind of a decision may be considered to be critical and at the same time strategic, especially where the operating environment, where competition is highly stiff in the business environment, okay? Where competition is highly stiff, so you need to be very careful as a business entity before you decide whether you should contract out a particular component or sub-assembly to an outside supplier. Not only that, the company also need to protect the degree of secrecy underlying its products. You know, every product has its own underlying secrecy that is embedded that make the product to be unique in the market. All right. So if you want to contract the production of that product or the manufacturing of that product to an external party, then you need to be sure that that external party will be able to maintain the degree of secrecy underlying the product. Because if the company's competitor get to know about the secrecy underlying your product, the company may be out of business. And that's why before final decision is taken, you need to ensure that you have a reliable supplier. All right, you have a reliable supplier or a reliable external supplier that will maintain that degree of secrecy. So these are the things you want to talk about under make or buy. One thing you need to know is that as far as make or buy decision is concerned, the company has the capacity to either manufacture the components, sub-assembly, or the raw material internally or contract it to an outside supplier. All right. Oftentimes, in fact, in practice, you will notice these days, you hardly see a big company or a large company for that matter that will be engaging itself in recruitment activities. Most of all those routine activities have been outsourced to an external party or an external company so that management can focus attention on those activities that are critical to the business success factor. All right. So this is why management is thinking on whether they should make or buy the components, the sub-assembly, or the raw material from external contractor. Okay. Now, the decision under this circumstance should be looked into perspective. All right. So the economic perspective, then the qualitative factor. Under the economic angle, what are you supposed to do? The most important thing to do is to compare the supplier's quotation versus the relevant cost of making the component, whether it will result in economic saving or deficit to the organization. I repeat, under make or buy decision, when you want to determine the economic analysis, when you want to carry out the economic analysis under make or buy decision, the most important thing to do is to compare the supplier's quotation versus the relevant cost of making the component or of making the sub-assembly or the raw material. All right. So how are you supposed to do this? Of course, at all time, examiner will surely give to you the supplier's quotation. You are going to be given the supplier's quotation. You will see there in the question. Then you now compare this with the relevant cost of making. Okay, you compare it with the relevant cost of making. Under the relevant cost of making, you go to the question. If you can see raw material, if you can see direct material cost, you pick it. Direct labor cost, you pick it. Direct expenses, variable overhead, opportunity cost, direct or incremental fixed cost, all those specific attributable, all right, attributable fixed cost. You consider it. Any cost that is relevant to the component or to the sub-assembly, You consider it. You add everything together, then you total all the relevant costs. So the total relevant cost minus the supplier's quotation will give you either saving or deficit. So of course, at this point, you need to make a decision. So if the supplier's quotation is more than or is greater than the relevant cost of making, your decision is to make the product. What will cost you to make the product if it is less than what you are going to buy it from outside? So it's better for you to make it internally. Then, number two, if supplier's quotation is less than the relevant cost of making, that is, if the amount you are going to buy it from outside supplier is less than how much you are going to incur to produce it, then it's better for you to buy from outside supplier. However, it is possible that the supplier's quotation may be the same thing as relevant cost of making. That is, it can be equal to 0, no different. Then the company can decide to either make it internally or purchase it from outside supplier. However, the final decision will depend on other qualitative factors. Therefore, what are the qualitative factors you need to take into consideration under make or buy decision? All right, there are some specific questions you need to answer as far as make or buy decision qualitative factor is concerned. One is that you are going to divide it into two, okay? When you want to state your qualitative factors under make or buy decision, you divide it into two. What are the factors you need to consider? If you want to decide to manufacture the component internally, you want to produce the component internally, what are the factors you need to take into consideration? That's number one. Number two, if you decide to purchase or you want to contract the component to an outside supplier, what are the factors you need to take into consideration? So by the time you speak of three under internal production or internal manufacturing, then you speak another three under contracting it to an outside supplier, you notice that you would have written so well on that day of your exam. All right, so let's pick it one by one. Let's go first. What are the factors you need to consider if you want to manufacture the component internally? First thing you need to do, remember, you want to produce. For you to be able to produce, that means you must have the requisite manpower, isn't it? You must have the required manpower for you to be able to produce, because if you don't have the people that will do the production, what's the point, right? So the first thing you need to do, you can ask yourself, as a company, you will want to produce, okay, you need to ask a question, do we have a required manpower to manufacture the components in addition to the existing product? If not, if you don't have the required manpower, then it's better you contract it to an outside supplier. Number two, under the first one, let me label it as one. Under the internal, if you want to manufacture it internally, then another question you need to ask yourself is that, do we have the requisite technical know-how or expertise to produce the components in-house? All right, because if the product is unique and you don't have the requisite know-how, how will you be able to produce it? All right, if you don't know how to do it, that means you cannot produce Europe. You better buy it from outside supplier. So you need to ask yourself whether you have the requisite technical know-how or expertise to produce the components in-house. Then number three, under the internal production, is that you need to ask yourself if as an entity or as a company, are we permitted by law to manufacture the components in addition to the final product? Because not all products are permitted by law in any states. All right, so you need to ask yourself if the law of the land permits you to produce or to manufacture the components. All right, that's another factor you need to take into consideration under the internal production. Then number four, under the internal production, the need to maintain better quality control or protection of the company proprietary technology is also one of the factors you need to take into consideration. You need to, because as a company, say for example, you have been manufacturing the product, and then customers are aware about the quality of your product. Now you want to contract it to an outside supplier to be doing it on your behalf? How do you ensure that the quality of the material of the product is maintained or even improved upon? All right, that's the thing we are talking about. Also, the degree of secrecy underlying the company's product will also need to be taken into consideration. What makes your product to be unique in the market? Then you have to protect that degree of secrecy. So it's one of the factors you need to take into consideration. So for the internal production. Then let's talk about the external if you want to contract it to an outside supplier. The first factor you need to take into consideration whether to contract it to an outside supplier is the fact that you need to ask yourself whether, as a company, do we have a reliable supplier who can deliver according to specification? That is, what do you mean by specification? As you want your product to be, can the reliable supplier deliver according to that specification? Say for example, we're in the physical class and I hold a marker, you know how marker looks like, all right? So if the company now decide that you want an external person and an external company to be producing the marker on his behalf, so can the external supplier produce the marker the way you want it? That is the specification. So if that cannot be done, then it's better the company continue to produce it by itself. Then number two, you also need to consider whether the reliable supplier can satisfy the existing capacity level, okay? Especially if the component is critical to the normal operation. For example, if you need 100,000 units of that particular component, the supplier should be able to deliver anytime you call on the supplier, but not a situation whereby when you say you need 100,000, the supplier will tell you, oh, I'm bringing 60,000 now. I will bring the 40,000 later. That is not what you want, because if this component is critical to the normal company's operation, that means there will be disruption. There wouldn't be a smooth production run. So as a result of that, you need to guide that it's better for you to produce it so that you can ensure that there is smooth production run always. So you need to consider if the reliable supplier can satisfy the existing capacity level. That's another factor you need to take into consideration for the external production. That is, external party will do it on your behalf. Not only that, you also need to ask yourself whether the external supplier or the reliable supplier can offer a long-term arrangement. It's not a one-off thing. When you supply me today, you continue to supply to the foreseeable future, provided the contract is still in effect. So this is what we are saying, all right? So you must ensure that the reliable supplier can offer a long-term arrangement so that you are not changing supplier almost every now and then. You become now be resorted to negativity or impair the image of the company. Don't mind that company. They are just changing supplier anyhow. So you need to guard against that. You must ensure that you have a reliable supplier who can offer a long-term arrangement. So these are some of the factors you need to take into consideration as far as make or buy decision is concerned. When you look at the ebook which I presented to you, there are more than this in the ebook, so you can read more in that. So these are the things you need to take into consideration. These are the concepts you need to consider as far as make or buy decision is concerned. What is most important is that under make or buy decision, I mentioned something. The first thing I mentioned is that the company has the capacity to either make the component internally or purchase it from an outside supplier. Then number two is that when you want to determine the economic analysis, the most important thing you need to do is to compare the supplier's quotation versus the relevant cost of making the component, whether it will result into saving or deficit to the organization. So if the supplier's quotation is more than or is greater than the relevant cost of making the component, then it's better for the company to make it. But if supplier's quotation is less than relevant cost of making, then you buy from the outside supplier because it is cheaper. Then I also mentioned about the qualitative factors that you need to take into consideration as far as the make or buy decision is concerned. So at this point, let's have illustration to that effect. Let's have illustration. Yes, let me look at who will read this one for us. Muibat, please read. Muibat. Oliver has spoken. Emirad has spoken. Ablatif also commented. Yes, but yes,
Okay.
Muibat, go ahead.
No, it's Uche.
Okay.
Others should
Illustration
mute,
one.
please. Others should mute. Oliver, mute.
Okay, let me wait.
Sorry, my network may cut off now because it's not stable. So, hello?
I can still hear you. Go ahead.
Hello?
Yes, go ahead. I can hear you. Muibat.
Okay. Hope Nigeria PLC is considering whether to manufacture or purchase a particular component, KP6. This will be in batches of 40,000, and the buying in price will be 25 per unit. The marginal cost of manufacturing components KP6 is 19 naira per unit, and the component would have to be made on a machine, which is currently working at full capacity. If the component was manufactured, it is estimated that sales of 4,000 units finished product of ENS, which has a marginal cost of 240 naira per unit, and sales for 320 naira per unit will be lost. Required: A, determine whether the firm should manufacture or purchase components KP6. Okay. B, as the management accountant of the Hope Nigerian PLC, list 5 basic assumptions of cost, volume, profit analysis, and identify 3 of its applications.
Thank you very much, Muibat. So that is the question. That is the question. In the A, our focus is on the A part of the requirement. The B part is a different topic on its own. You know, this is an exam question. So when you're writing an exam, examiner can merge different topics together in a question. So the B part is talking about assumption of a cost volume profit analysis. So it's a topic on its own. When we get there, we'll be discussing that. But for now, so in this A part, you have to determine whether the firm should manufacture or purchase the component KP6. So you can see, examiner wants to know whether the company should manufacture or purchase component KP6. This is make or buy. This is make or buy. So if that is the case, what are you supposed to do? Very simple. Just prepare savings or deficit from making the component KP6 by comparing the supplier's quotation versus relevant cost of making. So go straight to the question. How do I determine where is my supplier's quotation? Examiner has told you that the company wants to produce component KP6, which are in 40,000 batches, and the buy-in price per unit is 26 naira. Buy-in price is the same thing as our purchase price, okay? When you buy it from outside, the amount you are going to pay is 26 naira per unit. The marginal cost of manufacturing component KP6 is 19 naira per unit. Marginal cost is the same thing as variable cost or direct cost, okay? And the component will have to be made on a machine which is currently working at full capacity, okay? If the component was manufactured, it is estimated that sales of 4,000 units finished product of ENS, which has a marginal cost of 240 per unit and sells for 320 naira per unit, will be lost. That means there will be contribution lost, because if your selling price is 320 and the marginal cost, variable cost is 240, the difference between 320 and 240 is 80 naira. And you are told that if the component is manufactured, 4,000 units of the finished goods, of the finished product of ENS will be lost. So if that is the case, there will be contribution loss of 80 naira per unit. So just multiply 4,000 multiplied by contribution loss of 80 naira per unit. So whatever you have, that's that. So this is very straightforward. So all I need to do now is to determine savings or deficit from making component KP6. Let me stop sharing this and move to the working note. Okay. Illustration number 1, make or buy. This is make or buy. Solution to illustration. Solution to illustration number 1. Okay. And then the name of the company is Hope Nigeria PLC. So I will say Hope Nigeria PLC. I will then say savings or deficits from making component KP6. All right. So create 2 naira sign or just do 1. The first item will be supplier's quotation. You remember, under make or buy decision, the most important thing you need to do is to compare the supplier's quotation with the relevant cost of making the components. So I will pick supplier's quotation. Okay. At this stage, you need to establish, do you want to use the par value or you want to use absolute value? So the buying price, the supplier's quotation is 26 naira. So you can say 26 naira, or you write the total, multiply 26 by 40,000 components that you want to buy from outside. But it's better for you to use absolute value. Why? Because examiner told you in the question that there will be contribution loss of 18 naira for 5,000 units produced. Okay, if the company produced 5,000 units, let me see the question again. Yes, if the company was manufactured, it is estimated that sales of 5,000 units of finished product of ends will be lost. All right, so in that case, you cannot use par value, you have to use absolute value. So in this case, for me to use absolute value, 40,000 components that you want to buy from outside at what price? 26 naira. Give it to me. What do you have there as total? 40,000 multiplied by 26. Yes. Are we still together?
1 million.
1,040,000.
1,040,000. That's the total purchase price from outside supplier. So you compare that with the relevant cost of making the components, KP6. According to the question, we are not given direct material, direct labor, all those variable costs. Everything has been matched together in your marginal cost. Marginal cost is the same thing as variable cost. So I will then come here, marginal cost. The marginal cost for 40,000 components at what price? What's the marginal cost per unit? 19 naira.
19 naira.
Okay, 19 naira is the marginal cost per unit. So 19 multiplied by 40,000.
760,000.
760,000. That's total
Yes.
marginal cost. You also told that if the component is manufactured, 4,000 units, okay, of finished product of ends will be lost. The sales of 4,000 units of finished product of ends will be lost. All right, that has a marginal cost of 240 naira, then selling price of 320 naira. The difference between selling price and variable cost is contribution. So 320 minus 240 multiplied by 4,000 units. What do you have there? So I would then come here, contribution loss. That's is a relevant cost. Contribution loss. So 4,000 units multiplied by, let me do it this way. 4,000 units multiplied by 320 minus 240. So what do you have there? That's
320.
That's 320,000. So no other cost again. So add it up. 320 plus 760. That's 1,080,000. So this is A. This is B. All right. So savings or deficits. All right. So the difference between the two is 40,000. 40,000 is less than 80,000. Sorry, 1,040,000 is less than 1,080,000, which is 40,000. That's a deficit. So it's better for the company to buy. All right. So decision now. Decision. Hope Nigeria Limited. Let me go to the next line. Hope Nigeria Limited should purchase components KP6 from outside supplier. Okay, outside supplier. So you can say since it is cheaper to do so, or you can just stop here. You are good to go. That's it. That's that. Then, of course, you can now state whatever the assumption, whatever the qualitative factors I need to take into consideration. All right. So like I've mentioned, all those ones I read out to you the other time, the 7 qualitative factors. So that's end of the question. You can see it's not difficult. No matter how big is the question, just compare supplier's quotation versus relevant cost of making. Let's see if you can have one more illustration under this. So that in our next class, let me see. So I'm going to do any other one. Yes. So that in our we are going to have 3 different illustrations under this. Or let's do it this way. I will give you one as an assignment. Okay. Let me give you. Okay, I've given you one assignment, Abby. All right. So it's okay like that. You are even complaining on the one assignment I said you should submit on Wednesday. You wanted me to allow you to Thursday. So let's do illustration number 2. So that in our next class, we are going to do illustration number 3. Because this is a different, this illustration number 3 is a different scenario. And the remaining minutes that we have cannot be sufficient to do that. Let me even see this illustration number 2. Yeah, we should be able to. So somebody should read illustration number 2, please. All right.
Limited produces and sells wholesalers a highly successful line of summer lotion and insect repellent, has decided to diversify in order to stabilize sales throughout the year. A natural area for the company to consider is the production of lotions and creams to prevent dry and chapped skin. After considerable research, a product has been developed. However, because of the conservative nature of the company management, Songo Tedo management has decided to introduce only one of the new products for the coming season. If the product is a success, further expansion in the future years will be initiated.
Okay. Hello, Emirad. Sorry to disrupt you. I noticed that I observed that we may not be able to finish this question in the next 10 minutes. We have about 9 minutes more. So let's call it a day, so that in our next class, we are going to start afresh. All right? So, hello?
Hello, sir.
I second that idea.
It's okay. So let's call it a day. Let's stop here. In our next class, we are going to, please, Emirad, sorry for that disruption. However, you will be the one to read it for us on that day by the grace of God. All right? So let me know if you have any question before we close the class. Any question?
Yeah, I have a question. You know, during the course of explaining and writing out the solutions, someone
Yeah.
like me, I did not write anything. So how am I going to be able to jot everything out? Are
I
you going
will
to share
usually
it?
I will share it. I will share it. I will share all those working notes. I will share them. The recording will also be shared, so you can listen to it.
All right, sir. Please don't forget to add me to the group. I'm not yet on the group.
Yes, no worries. Just send me the WhatsApp chats.
All right, sir.
Okay, then. So in the absence of no further, Oliver, you want to ask a question?
No.
Okay. So in the absence of no further question, I want to say thank you for joining this class. I will meet you again next time by the grace of God. Take care, everyone. All right, Oliver. Oliver, okay, raise your hand. Yes, talk to me.
No. I don't know what is happening to this.
He's all right then. All right.
Thank you.
Good night,
Bye. Yeah.
everyone. Bye.